Welcome to RSI Passive Income Academy. Today we'll be starting with our first pair for analysis of upcoming week and running down to or touching base to what we did last week, a breakdown of what happened last week in this pair USD JPY. As you can see, the price as it moves with our entry model, we indicate according to the price flow, price flow, price ceiling, price flow, price ceiling. So this is from the last week. Price following the price flow, you can see there was a price clutter formed here, price clutter, and the price clutter to the downside. So what we're expecting is for the price to come down from this equilibrium level, form a proper depreciation level from expansion level, but the price didn't do that, so it went up, form another expansion level here and close to the dumping zone that was formed on the preceding week. So next thing we're waiting for is for depreciation level to be formed. Then we enter, as you can see, enter above the equilibrium level, which is expansion zone. So within the expansion zone, the depreciation level was formed, putting my stop loss just further enough from my entry based on the choppiness of the price movement. So I put my stop loss, enter, went down to 1:1, shift my stop loss to break even, and the price retraced back. And after chipping my stop loss to break even, first trade again, I was thinking about it while the price was coming here. Put my stop loss at least to 50% loss, and the price went down. And I saw this choppiness, and I thought the price, no, it's gonna hit me my stop loss again. So what I did is took 1:1 for a day, right? So I carried on looking at the price movement. As you can see, the price formed, the price flow went up, price flow from price ceiling went price flow, and we were remaining into this below equilibrium level, which is the construction zone. So I was waiting for a price to at least show me or form appropriate appreciation level and enter from there. As you can see, form appreciation level on Wednesday, price went up 1:1. I was not rushing. I just taking profit at this trade, so I was looking for 1:2 maximum. So went down, touch again, break even. So I break even on this trade, and it just shot up from my entry. And from my entry, it formed the expansion level. So the expansion level, the price went down to expansion zone on Thursday. Then I was looking for depreciation level to be formed. Depreciation level to be formed, and it went down again. Starting off the day, I take 1:1 because I didn't want to break even. So 1:1 went up. I was thinking about entering this price again, but I was looking at this choppiness, so I didn't want to enter at another trade. So if it comes here, putting the limit order, if the price comes here, but I left it to break. So I left the market to break. So the market break to the downside, changed the momentum to the downside, tested the collecting zone, and I was waiting for proper gain here. Because we are in a construction zone, I was waiting for appreciation level to be formed and took the upside, but there was no clear appreciation level. The market just went through to expansion zone. From expansion zone, price went down, looking for depreciation level to be formed again. No depreciation level was formed, price went down. Now it's currently retracing, so I'll be looking for the price again, at least to come up, form another expansion level, or go down, form another construction level, and I'll be looking for appropriate appreciation level. One, this price cluster has been broken and another collective zone is formed on the downside, and I'll be looking for entry to the down to the upside. So what I'm looking for it is 1:2 minimum trade. But however, if I'm forced like this and the market is choppy, and I'm looking for 1:1 for my first trade, then I know on my second trade I'm risk free of the week. So the next trade I'll be looking at least at break even or losing 1% of the overall account. So it's what I'll be looking for in terms of risk management. But however, with the entry model, like I've indicated earlier on, and there is heavy fundamental that is coming on Wednesday, which might shift the market FOMC decision in terms of interest rate. Based on the previous data, inflation went down a little bit. I think it was 1 point down from the previous month's inflation data, and PMI also showed some improvement than with the PPI, but the unemployment is especially last FOMC, sorry, last NFP, it was a bit hot. It was higher than expected. So I'll be leaning towards Fed. It's either keep the interest rates same level, so unchanged interest rate, or cut 25 basis point in interest rate. So those that was okay. That is the event, biggest event that will shift the market momentum. As you know that Japanese Bank of Japan already take up their interest rate. They've increased their interest rate in order to strengthen their the currency. So if the Fed do the opposite on Wednesday, so we'll see really this pair going down in a downward direction. But however, if they keep the interest rate unchanged, we'll see this pair gaining strength to the upside. So that's what I'm expecting from the next week. Other than that, please leave a comment below if you want to know more in terms of technical analysis, which is 20% of my entry model, which consists of focused modeling. Then I look at statistics analysis, where I look at the mean, the mode, the standard deviation, the skewed standard deviation, and I look also at expected highs and lows within the currency pair. Then entry model, the one that I've explained to you, and the one that I use for my sweet entries. Other than that, please leave the comment below if you still have any other questions in terms of fundamental analysis. Please do not forget to press a thumbs like button. So if you haven't subscribed, please subscribe on this channel, and I will see you on the next pair.